is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. This is going to be the last episode of the year, and I think we're going out with a bang because our guest today is Ryan Selkis. For those who don't know, Ryan is the co-founder and CEO of Messari, a leading crypto asset data and research company. Prior to founding Messari, he was an entrepreneur in residence at Consensus and was on the founding teams of Digital Currency Group, where he managed the firm's seed investing activity, and CoinDesk, where he led the company's restructuring and annual Consensus conferences. He has been an investor and very prolific writer, which is what we're talking about today, in the crypto industry since 2013. Ryan annually releases one of the finest pieces of crypto research out there, the Crypto Theses. It's become, I think, required reading for anybody who is serious about understanding what's going on in the space. Every year, the Crypto Theses grows in size and ambition, which I think is suitable, appropriate, given it sort of tracks the growing size and ambition of the industry itself. And the 2022 edition, the edition looking forward to the next year, is the biggest and I think the best one yet. At over 165 pages, is a real feast for crypto curious and diehards alike. So I would strongly encourage you to check it out. It's deeply researched and also very entertaining as well. And I think we're going to dig into that. So Ryan, we can't cover everything that you write about. And I know Andrew's got his share of questions too. So let's start simply here. You open the report talking about a crisis of trust in our institutions. This is something that I've been paying attention to for a while, and something we wrote about in Blockchain Revolution. Is the rise in popularity of crypto in part a reaction to our disillusionment with traditional institutions, including banks and governments?
Well, I think almost definitely that's how Bitcoin was born, with the Genesis block encoding of the bank bailout headline from the Times in London. So I think it's always been, I think, part of the DNA. It's it's one of those situations where timing matters, and I think we hit a tipping point with the recession in 2008 and the decline in trust in the financial industry that. Something like decentralized money and all sorts of decentralized technologies could actually take root and thrive. Because if things are going perfectly well in your home country and economy, and things are booming, and there's a high degree of trust, and the bureaucracy is working, then it's tough to get people excited, I think, and really see much demand for decentralized services that come with them, like other risks. It's not a panacea. So there's always these trade-offs, and without something being fundamentally broken in the real world, it's tough for a disruptor to come along. And this is true with every kind of new emerging technology. So I think the thing that stands out is just the degree of mistrust in Congress, in basically the entire federal government bureaucracy, state and local governments as well, and the media in particular, right? So like your information sources and your leadership across the board in the West is generally mistrusted and viewed as both incompetent and unethical. And that's a bad combination. So the opportunity for decentralized networks and Web3 is basically to align incentives. You might not trust the entire community that are the owners and operators and net promoters of a given protocol, but you can at least trust the underlying protocol itself and kind of make a judgment call as to whether that's something that you want to opt into and participate in. And I think the fact that we're now in a situation where there are thousands of protocols with corresponding tokens, there is greater choice than ever before. And you can basically leave people to their own devices to make a judgment call as to whether they should be participating at this stage and whether it fits their risk profile, and whether this is a superior option to the centralized services that they use. That's true in finance. It's true in entertainment with NFTs now. It's going to be true in gaming and decentralized social media, which I think are going to be two of the biggest areas of growth in the new year. And of course, it continues to be true with money, right? The Fed might be hiking interest rates next year, but that's really only going to take your real returns on savings from -7% to -6%. So at the end of the day, I don't think the macro thesis changes, and as Bitcoin and Ethereum and some of the other kind of larger projects go, I think so go the rest of the industry. So the opportunity has not really changed at all in the course of the last few months, regardless of what's going on with interest rates, or there's been a tech correction, there's been a little bit of a crypto correction. I think if anything, this might be a good kind of long-term bloodletting to just cool things off a little bit, so that we can go through a shallower bear market if that does come, and then hopefully to resume a upward trajectory given all the other tailwinds.
I want to talk about the market itself and whether or not we think there's going to be a shallow or steep or any continued contraction. But you did mention the term Web3, which has become, it's been around for a long time. I think we know that, but it's become the dominant way that a lot of people talk about crypto. Now, some people in the mainstream media, like Joe Weisenthal, who frankly is my favorite mainstream journalist, he says that basically this is rebranding allows the previously crypto skeptics to change their tune and say, ooh, Web3, now it's forget about Bitcoin. It's all about this whole Web3 thing. So a couple of things. Do you think it's a rebrand, or do you think this is just an evolution of crypto, which is that it started with Bitcoin, but has grown to encompass these other areas where we can really genuinely think about it as having a changing impact on all of technology and all of our sort of economic systems? Or is it really just sort of a clever rebrand?
I think it's a little bit of both. I think the tipping point for the rebrand was in the emergence of NFTs and the metaverse thesis, and kind of the explosion of crypto-enabled gaming that really led to the Web3 thesis, kind of coming to prominence. And along with that, you had the emergence of these kind of bottoms-up communities of DAOs, right? So these basically community-managed treasuries for all sorts of projects. It started arguably with some of like the profile picture communities, like Bored Ape Yacht Club and Punks and so on. But it's also expanded into like community venture pools like the Lao and Metacartel. It has also been, a kind of a memeable phenomenon, like the group that tried to buy the Constitution and Constitution DAO, right? So you take a look at all these things, and they very often look like toys. They are in fact like part of gaming, really. If you look at Axie or you look at Decentraland and some of the metaverse plays, I think crypto just doesn't seem to fit with those. With that kind of like virtual reality world that I think has come to prominence in the last year or so. Like, is Beeple's artwork crypto? I don't know, right? Like, it's a digital asset, it's digital art, but would people associate something visual like that with crypto, which is more like monetary in nature? And so I actually like so first of all, I think it is a smart rebrand. I also think it's a convenient rebrand because it seems to be a little bit more fitting when we're talking about a user-owned economy and user-owned marketplaces beyond just DeFi, right? So crypto was really about speculation and Bitcoin and layer ones like Ethereum and DeFi and all that, basically through the beginning of this year. And I think once we got into non-fungible tokens, now you're opening like an entire universe of kind of discrete digital goods that people wouldn't normally associate with crypto from the last few years being like the fungible assets. So I think it's a good thing. And so not only is it more accessible, I think it's more descriptive and kind of calls to the people are getting in now through things like fan tokens, whether Top Shot or some of what's going on with like the European soccer leagues or now with Audius and music or Royal or anything like that. My sense is that Web3 is going to basically be an all-encompassing term that captures monies, whether they're kind of volatile, digitally native like Bitcoin or stablecoins. It'll capture DeFi, which is basically the financial plumbing, NFTs in the metaverse, which are like all of the virtual goods that populate your digital life. DAOs, which is the governance layer, and then the kind of computing layers that sit underneath, whether that's the hardware networks like Filecoin or the actual like ledger computation and the block space that you need to process these transactions with all the different layer one and layer two EVM and kind of other blockchain solutions that have come to market.
Yeah, you mentioned a whole bunch of stuff we've actually covered before in the podcast, including that last bit about the decentralized internet infrastructure. We had Greg Osuri from the Akash network, which is a Filecoin-like in the sense that it's trying to build a decentralized cloud. I think that's really good. The idea of like Web3 is not something in addition to DeFi, it's an umbrella term, and you can find a way to fit a lot of these big trends into that framework. And it is a really useful way to understand it. But undeniably, it has helped the branding of this industry, I think. If that matters to you, some people think that's, they roll their eyes at such a concept. But to me, I think it's important that, big companies and people in government are more comfortable with this stuff because that's going to help it grow. Andrew, I know you had a question you wanted to ask.
Yeah, I mean, there's so much stuff to cover. I think one of the things you were sort of mentioned how you thought decentralized gaming was an area that you thought was going to explode. One thing that we've been sort of, obviously our podcast is DeFi Decoded, but we find ourselves sort of covering everything in DeFi, Web3, NFTs, DAOs, and now obviously decentralized gaming. Which of these areas are you kind of most personally excited about over the next year, like in 2022?
We are at a pretty high point in the cycle right now. I'm not sure that anything is necessarily going to go, 100x vertical, like we've seen this year and last year. I do think gaming is incredibly exciting. I also think that it's going to be very difficult to actually make money as an investor or participant in these economies, just given how exuberant the markets are, private markets and otherwise. But I think that's going to be a really interesting part of the growth story next year. I'm actually much more interested in Web3 social networks, right? So I think the tide is starting to turn and people are really starting to see the effects of censorship or kind of changes in these algorithms, and they're just a little bit more aware of how little control they have, whether it's YouTube, Twitter, basically anything with a lot of user generated content where you've just, as soon as you start to see some examples of censorship or shadow banning or deplatforming, it's kind of hard to look away from that. And I would imagine that the crypto community is relatively unsafe if you think about like target personas and people on these different platforms. And maybe the evidence there is with what happened with Discord, as soon as they floated the idea of actually introducing a native cryptocurrency or NFTs or anything, just kind of mentioned it casually on Twitter, and there was basically a user revolt. So the fact that crypto is that much of a lightning rod issue for like the hardcore skeptics and people that just do not want it to touch their networks, I think the odds are good that you're going to actually see a crypto first or kind of token native solution that ultimately the crypto community rallies around. So I'm interested in a couple of those different plays, and we'll be investing actively in that as a theme. But I also think that we're at a point in time where DAO, like basically everything infrastructure related, is underinvested. So anything around like DAO tooling, NFT tooling, and then interoperability between all these different blockchains. Those are probably the three core areas that I'm spending most of my time and energy looking outside of like the application there.
Yeah, that makes sense. And you brought up a great point, sort of cross-chain, like how building tooling for all these different chains. I know you had one of the sections I kind of appreciated the most in the theses was sort of the EVM versus non-EVM divide, which is actually something that Alex and I have talked a ton about on the show, sort of how there's almost it's like a bifurcation now of almost tooling and communities between sort of the EVM chains and then the non-EVM chains, which is kind of like Solana. And so
Andrew, just for the benefit of some people who are listening, EVM, Ethereum virtual machine. So basically, blockchain infrastructure and projects inside the Ethereum ecosystem, and then those that are being built on separate protocols or platforms like Solana, right? Just to restart. Yeah, go ahead.
Yeah, so I think it's something that I'm, as a sort of a developer in the space, I'm super interested in. How do you think about these sort of the future of these two separate communities? Do you think there is a future for sort of the non-EVM worlds, kind of like Solana, or I mean, it's obviously a lot further ahead than sort of EOS was back in the day, but it's hard for sort of developers to build on both platforms. So you kind of have to choose one side or the other.
I like the way Ryan Watkins and our team broke it down, which is basically that it's unlikely that the EVM will be the only solution, but at the end of the day, you won't have 6 or 7 different platforms to build on, right? So maybe we're there today, but ultimately, it'll be 2 or 3, and probably 2, maybe 3. I would say it looks sort of like we're going to be approaching a world where EVM compatibility is kind of one of the winners, and then the number 2 slot will kind of go to something like Cosmos Hub, right, or like IBC or Polkadot, or some standard that basically is built with the kind of modular design and interoperability in mind right from the get-go. Where Solana fits into that, I don't know, but I do know that it's probably the ecosystem that has the second most activity on it right now. So those are kind of the 3 or 4, I guess, that are some of the early leaders. But whether you're talking about Ethereum and the beacon chain, or you're talking about something like Cosmos and their kind of hub and spoke model, you are going to have a couple of different kind of central beacons that I think other blockchains plug into, and how fluid those different ledgers are is one of the pieces of infrastructure that I still think is missing. So I think that's why that's come out in some of the valuations we've seen for Aztec and Matter Labs and the ZK teams kind of worldwide. So I don't think that is a trend that's going to reverse necessarily, but I think we'll start to see some winners and some clear standards that are head and shoulders above their alternatives.
I wonder if the whole space grows so quickly that, to Andrew's made this point on prior episodes, that block space is basically the most scarce resource, and anything that can scale and do a decent job of running an application is going to succeed. Just like at least for now, it's not that whittling down of 2 or 3 standards might not be something that happens in 2022. It could be something that we finally settle on in 10 years or something like that. I don't know.
Yeah, I mean, I think it's too early to call a winner.
Yeah, well, that's for sure.
And there's way more demand than capacity currently. So that is always going to lead to more investment, and we'll kind of continue to go through these cycles. But it's a 15, 20-year trend, not something that's going to happen overnight. The other thing is, a lot of people talk about always compare like crypto to like the internet terms. The thing is, crypto was born arguably with the birth of Bitcoin. Yes, there were some precursors, but really the genesis block for Bitcoin in early 2009 was the day one for this industry. And the internet, even though the commercial internet was only born in the early 1990s, the internet itself and the plumbing and some of the core protocols were built well before that. So it depends on what your start date is, right? For how you think about where we are in the cycle, the super cycle. I mean, in terms of the proliferation of blockchains and token tech. But I try to personally just pick long-term trends, invest in them, don't touch them, and then continue to build myself. So 2022 could be a vicious bear market. It could be another kind of hockey stick growth year, anywhere in between. Not really sure. If you look at Bitcoin, though, it's been a relatively muted year. So we'll see. I think 2020 was big. 2021 was big for pretty much everything else except for DeFi and Bitcoin.
Yeah. You approach this with an interesting perspective, right? Because on one hand, Messari is this company that's widely used in the industry, and if you don't use it, please check it out. But you're also researching on your own and with this huge team, but you're also investing. And I think like in this business, maybe in more so than other industries, like being in the flow of the market is far more important than it is in other industries.
Mm-hmm.
And I think that it's people want to hear like what's your view on the market. So a couple of things that stood out to me in the report. One is that you talk about how in previous cycles a lot of coins kind of moved in lockstep, and smaller ones were sort of high beta versions of Bitcoin. Those aren't your words, but you did say that we're seeing a decoupling of crypto, which I took to mean there are some assets which are really useful and productive, like Solana, that's trying to compete with Ethereum, that's done really well, while EOS, which is trying to do the same thing, doesn't. And I think in previous cycles, things kind of went up a lot and down a lot together. So do you think that the decoupling is something that would continue in any kind of market environment? And that's sort of a segue into the next question, which is that you mentioned that maybe this bear cycle could be more muted than before. And that reminds me of the old line, people say this time is different right before the market crashes. So what's your view sort of going into 2022 on the market as it relates to valuing things that clearly have way more substance than in previous cycles, but also what kind of market dynamics we could see?
I think in terms of relative valuation a lot, right? So I talk about the potential upside from here. If you kind of look at historical metrics for Bitcoin and the holder base, we are relatively conservatively priced right now from a couple of core metrics. And there's certainly a lot of headroom, maybe up to 120, 150,000. Now, if you think that's all just kind of mad science and voodoo, which I don't really care one way or the other, because again, I'm thinking about like the 10-year play, then I would say, you're looking for what is the next comp that Bitcoin is going to overtake from the analog world? And to me, the answer is probably gold, but not necessarily the full gold market, which includes things like jewelry and industrial use cases, but the $6 trillion or so of gold that's held on central bank balance sheets and specifically for investment purposes. If you were to have parity between Bitcoin and that part of the gold market, then we'd be about $300,000 for per Bitcoin, for instance. Should you compare Ethereum using the same rubric? I don't think so. I think something more analogous to like one of the big tech companies, one of the things would make more sense. And right now, it's half as valuable as Meta. It's 20% as valuable as Apple and Google and Microsoft. So do you think that Ethereum should be closer to at least one of the big tech giants, or do you think that it should eclipse all of them, or do you think that like the other layer one computing platforms as a class will start to look more like the big tech companies that dominate the NASDAQ? So there's clearly still headroom there, but it's not 100x. It's not it might not even be 10x from here. So it is a more mature class, at least kind of in the medium term. I think that the long-term trajectory is still there. Will we see a $500,000 $1 million Bitcoin? Maybe at that point, Bitcoin starts to replace currencies legitimately, not just the US dollar. I think that's probably last, but maybe emerging market currencies that are high inflation, for instance. I think the issue is there's not really any undervalued or conservatively priced market anywhere right now, because real rates are negative, so investors continue to move further and further up the risk curve, and crypto is just the maybe most aggressive manifestation of that, where people are basically betting on 10 years of performance getting pulled forward just because of the strong tailwinds that crypto's realized historically. I've lived through a couple of cycles. I know you have as well. So I'm a little bit more cautious. and basically, have been paring back most of my public crypto markets exposure, and basically just staying conservative with allocations to Bitcoin and Ethereum, and then thinking about the angel portfolio that I have. But everything in between, it could go, it could continue to move north. It could also fall off a cliff, right? If we go into a protracted bear market. So I think the better risk reward for me personally is going to be in the private markets, which is a little different for most investors, as you know, because it's more network driven.
Yeah, and also because most people can't participate in the private markets.
Exactly. Yeah. But that doesn't mean that I'm trying to like flip things and like dump on retail, right?
No,
it's just that like my default mode is I suck at trading, both in general and because I don't have really the time and kind of headspace to focus on it. Trying to build a company. It is much easier for me to find teams that I like, that I'm kind of co-investing with other people I know and trust and think are going to be other kind of value-added community members, because I think the investors matter more in crypto than they do in kind of the private early stage tech markets, because all of these are network plays. So if you kind of hit those kind of two buckets and you're kind of in something I like thematically, then it's easier for me to pull the trigger and loosely stay on top of the project and just be kind of long-term, valuable, hopefully, and along for the ride. But again, like very different from what most listeners are going to get exposure to. I'd be probably a little bit more conservative in the public token markets.
Yeah, that makes sense. I think one thing too, just talking about the broad overall market, not to switch gears too much, but one of the biggest factors sort of driving, at least in the past, driving sort of the broad crypto market was regulation. And this was kind of an interesting year because it seemed like we were facing a lot of sort of headwinds in sort of the regulatory environment, at least in the US. And then it looks like some of it abated sort of last week. And then now it seems like things are coming back again in terms of regulatory risks. I'm just kind of curious, specifically on sort of American crypto policy. I think the industry sort of surprised itself with its sort of clout and power during the budget debates regarding sort of the broker provision in the infrastructure bill. And it seems like senators in Congress is not knowledgeable, but seems to be getting more and more knowledgeable about sort of the technology. And it seems like there's some people on both sides that are sort of defending, at least for once. I'm just kind of curious, what do you think are the three most sort of important policy challenges for the industry in 2022, specifically in the US?
Three most important policy challenges. Well, first of all, I've gotten used to Discord notifications, so I'm not sure if you guys have been picking that up the whole time. I finally just realized that if you heard me clicking around, it was basically turn those off because I'm just kind of used to the slow and steady ding of it. But in terms of policy challenges, I'd say the worst case scenarios, I think, have started to subside a little bit for a couple of reasons. One, Jerome Powell was reappointed. I don't necessarily think he's a friend to crypto, but he's less bad than some alternatives. Same can be true. Same can be said for like the OCC with Amarova, who might have been the first candidate that was equally reviled by both crypto and Wall Street in equal measure. When she kind of pulled herself from that process, I think everybody let out a collective sigh of relief. The current OCC chair is no Brian Brooks, right? But beggars can't be choosers with this administration. I think one of the reasons I think we've seen a little bit more measured commentary from Congress at this point, and the criticisms of crypto have been a little bit more subdued. It's one, because the infrastructure bill pushed back, and two, let's just be honest, like the Democrats are going to get slaughtered right now in the midterms. Like they are just horrible at governing the country. Like, I'm sorry, like I'm not trying to step on anybody's personal politics, but you just like look at the results and kind of look at where the polling is, and look at the tone and kind of how they're basically managing the political process right now. And the truth is they can't afford to make any more enemies, and crypto skews younger. and like tech is something that skews progressive. So, they're basically potentially alienating a pretty sizable chunk of their voter bloc, especially the ones that are kind of on the fence. If there are moderate alternatives on the right that are pro crypto, and there's just far left kind of socialist, anti-crypto, anti-tech representatives that get through the primaries on the left, then things are going to get really, really out of hand in terms of the swing and the balance of power. So I think that I know a lot of people don't like to talk about it. It's getting marginally safer now that Trump's out of office, but let's just look at the actual map and what's happening. And I think that's a big reason for why we've started to see a little bit of a tempering in criticisms. And there are some good Democrats that have been really thoughtful about this, like Senator Wyden, Erica Rhodes, that's running for Brad Sherman's seat in California, is great. We have a Yearn developer, Matt West, that's running for an open congressional seat in Oregon. So you've got, I think, some good, exciting candidates on both sides of the political spectrum that are bona fide crypto proponents. That if we can get a few of them in office, it makes the conversation a little bit easier, because it's an ignorance thing right now, and most of these 80-year-old senators and congressmen are just not going to learn crypto. There's no universe where that's kind of a realistic expectation. The kind of two policy areas that we do need to look out for. One is basically just going to be like a war of attrition, which is with the SEC, and we might get to the point where you basically need to ride out Gary Gensler's reign of terror for the next 3 years, because there's no alternative. You can't kick him out of office. Like, he's not going to be removed. He's an appointed candidate. He's incredibly competent, competitive, smug, and ultimately, very eager to maintain, jurisdiction and power. And he sees this as really a potential big political win for him personally, if he can kind of bring the industry to heel and get, crypto under the SEC's full surveillance. So that is probably the trickiest thing that we need to figure out, is just how are we going to kind of interface with the SEC right now, given the current chair of the SEC is I think just completely unreasonable, right? So that, I think, remains the biggest open question in the US. And then more broadly, I'd say the only other kind of big issue is, how are we thinking about privacy versus surveillance trade-offs? And this is going to come pretty fast and furious, at least in terms of how people are defining the new legislation that was passed, not on the broker language per se, but on this 60/50I kind of reporting requirement for kind of knowing your counterparties. So this was kind of the big provision that kind of snuck through in the digital asset language. It's basically going to require people to report all types of sensitive information on any transaction where the counterparty is facilitating something like either $600 or $10,000 in a transaction. That could potentially apply to something like a smart contract or some type of peer-to-peer payment, right? So
even apply to just gas fees if it's on Ethereum.
Yeah, right. Depending on the transaction. So it's like it could get out of hand really quickly. And then you pair that with what I think is already ongoing with most financial regulators applying things like the travel rule. Like, how are you ultimately going to allow for wallet-to-wallet transfers between a regulated intermediary like Coinbase or Kraken or an exchange that does track customer activity? And what will you allow them to basically transfer funds and interact with contracts from any external wallet, right? Or are you going to have this kind of one-step process where to withdraw to a self-custodied wallet in order to play with some of these other applications, you literally need to sign like an attestation that I am withdrawing to basically my cash wallet, and now this cash wallet is going to be surveilled by the powers that be. So there's a lot of really kind of dicey issues around privacy and reporting that I think need to get ironed out in a way that compliance is technically possible and it doesn't effectively just kind of push people offshore.
A couple of quick topics. You say that you spend 15 minutes looking at CBDCs in all of 2021, which made me laugh because I think there's no topic which has more interest in the mainstream media and less interest in the crypto community than central bank digital currencies. And I have to ask, like, we know about, you talk about DCEP in the report, the Chinese initiative, but we did our own analysis and most of these things are at best PowerPoint presentations. Like there's not really any actual things going on. And what is even the point of a CBDC in a place like the US? Like why not just let Circle and other companies who have already launched multi-billion-dollar US dollar stablecoins do the good work of spreading the US dollar all throughout the world? Like they're doing the thing the Fed would want anyway, aren't they?
I'm not as I'm far from an expert on kind of the Fed and kind of the plumbing of the traditional financial realm.
Yeah, right.
But I do think that there are some obvious benefits to the Fed creating a better digital payment system and something like a central bank digital currency. Now, there's a couple ways to do it. One is very dystopian, where you're basically trying to eliminate cash and make direct payments and withdrawals from people's accounts that are ultimately tied back to the Fed.
Yeah.
And that's a little bit Black Mirror-esque, right? But I think the other way is to basically use CBDCs as a tool where the plumbing between the Federal Reserve, all of the kind of Federal Reserve banks, and then kind of all of their kind of end customers is a little bit more fluid and transparent, and you just kind of increase the settlement times, and you have a better sense of kind of where risk is in the system. Caitlin Long, I linked to this in the report. Caitlin Long, who's formerly at Morgan Stanley, now the CEO of Avante in Wyoming, which is a crypto bank, had a really good. She and her team had a really good comment letter to the Fed on this issue of stablecoins versus CBDCs and kind of crypto's integration with the existing banking system. And she kind of lays out some of the pros and cons and highlights some of the risks to actual banks upgrading their systems to account for something that trades 24/7, right? And that is volatile, because those old systems and some of the old kind of fractional reserve requirements, capital requirements that are in place could be very difficult to comply with or create kind of bank run risks if banks were to kind of fully adopt more volatile decentralized currencies on their balance sheets or kind of integrate with the peer-to-peer open finance system versus something like a CBDC. So I don't think it's an appropriate expectation to think that the banking industry is just not going to participate in any kind of open finance system, and all the rewards are going to go to like the Web3 community without like some type of integration and some type of kind of blessing from the Fed. So there's like a whole spectrum there in the CBDC conversation where I just think that's going to take 5 years to play out, because there isn't a high degree of confidence between those players. To your point, though, on the stablecoin side, yes, I think stablecoins offer us a better opportunity to continue to maintain the dollar as a reserve currency of the world. Yeah.
You mentioned centralized firms, eventually getting into this stuff. And about halfway through the report, you say crypto CeFi firms have won, and I think you're referring to companies like Coinbase, for example, and won't cede their lead to banks and other traditional firms. So and then later on, you talk about Société Générale, the French firm, who rather than just doing some blockchain pilot, actually did something real, right, in DeFi. I can't remember exactly what it was. You could probably illuminate that for us. But it was sort of, you distinguish it as something, oh, they're actually using DeFi in a real way. They're not just like, it's not just window dressing. So, okay, let's talk about banks and other centralized companies. DeFi's TVL's grown to, a couple $100 billion. There's quite a lot of users now. It's still small, but it's growing really quickly. There's real money at stake here. So how are these big traditional firms going to get involved in Web3 generally, but specifically in the DeFi category?
Well, the SocGen proposal was actually kind of directly on the Maker Forum, right? And they basically proposed a collateral swap and having one of their bonds be used as collateral within the Maker ecosystem. So that was a pretty surreal moment. But I think that's going to be more or less the expectation that I have, and I think others have as well, is that basically DeFi is going to become like CDeFi, where the winning decentralized finance protocols are pretty tightly integrated with the existing financial system and kind of the existing regulatory regime. And then you're basically going to have maybe this two-tiered system where there's CDeFi, and then there's the more the frontier financial system, which is built by anonymous developers or pseudonymous developers, and ultimately is a little bit more kind of cutting edge and anonymity and privacy focused, which makes it basically next to impossible for any regulated institution to play in kind of that realm. But if you look at where Aave and Compounds and some of the other major existing DeFi protocols and their communities are going, it is towards tighter integration with financial giants. And that's not dissimilar from what we saw in peer-to-peer finance marketplaces without crypto, right? Like things like SoFi ultimately counted the banks as some of their primary liquidity providers once those ecosystems got to scale, because at the end of the day, most of the money in the world flows through Wall Street, and Wall Street finds a way to ultimately capitalize on those opportunities once the pie is big enough. And I think historically, basically until last year, it just crypto was interesting, but it wasn't necessarily something that was going to move the needle for a big bank or big financial company in New York.
Yeah, yeah, I think that's actually a very good point. I think one other thing I sort of wanted to touch on, maybe for too long, was obviously DeFi had a huge year in 2021 in terms of TVL growth. Over, I think it's around $250 billion now across so many different chains. But what's interesting is that the performance of a lot of these DeFi tokens has actually been relatively poor when you compare it to something like ETH. Why do you think all of these DeFi protocols have been sort of underperforming ETH over the last 12 months, given sort of the growth in fundamentals?
Well, I think there's two things. Number one, they had just an absolutely incredible 2020. So it's tough to kind of maintain that pace of growth. I think the other thing is, if you look at the regulatory risk to the industry, I would argue that the greatest threat right now is to DeFi in terms of kind of Western regulators. The decentralized exchanges, the lending protocols, like yield farming itself. I think the SEC in particular has kind of got them in their crosshairs, and they're thinking about these as potentially unregistered securities, because you're talking about network ownership and actual fees that are flowing through the networks. And then you also have kind of concerns on not just on kind of speculation around these markets, but the actual operation of these markets. So you're kind of getting slapped twice over. You're like an intermediary and potentially like a money transmitter. I don't agree with that, but I think that's the regulatory stance. And you're the fact that there's a native token with some type of intrinsic governance and value capture rights makes these kind of front and center for folks that matter in DC. Now, having said all that, I still think the long-term trajectory is that crypto exchanges will dominate incumbent exchanges because they're just using fundamentally better technology on the back end. And decentralized exchanges will continue to kind of eat into the market share of centralized exchanges. So you combine those two things, and again, if you're taking the 10-year play, then there's going to be plenty of opportunities. But which direction we go from here is an open question, and I don't pretend to have a crystal ball. I could see us going down 90%, or I could see us kind of going up another 10x and everywhere in between.
Yeah, and part of that sort of a scary thought as someone who creates DeFi protocols. But sorry, I'm getting some construction. Here, actually, Alex, why don't you?
Yeah, sure. I know the question that Andrew's going to ask because he just texted it to me, which is this thing you mentioned about the Omar Little of crypto, which I think made us both laugh. I'm talking about Tether. So for people who don't, know the reference, Omar Little's the hero or anti-hero of The Wire, which is one of the best shows ever. And you say he breaks the rules, but he lives by a code and everybody respects him. And you sort of think of Tether in the same way. But, speaking of regulatory risks to DeFi, I mean, the fact that, the main payment rail is this thing that I think is still cloaked in some degree of uncertainty. I agree with everything that you argue in the paper, but I think people still have a perception is also a risk in some form or another. So, what is on the other hand, Tether's absolute percentage share of stablecoin volumes, even though it itself has grown, has actually declined, right? Because USDC and others have come along. So, what is your view of Tether as a risk for the space, and do you think of it as my view is that it's going to be diluted away in terms of its relevance over time by the growth of these other things? I'm wondering what your perspective is on that.
Tether's interesting because it's actually not a DeFi token.
No, not at all.
Yeah.
But it's
no,
DeFi, right? It's
it's
held in collateral and
but my point is USDC is actually taking on much greater volumes in the DeFi markets, right? Like DAI and Terra USD and USDC are I'd say the primary stablecoins that are used in DeFi.
Yeah.
Tether is actually predominantly used as inter-exchange dollar settlement, right? So it's basically a euro dollar that's used by all the international crypto exchanges for payments flow and settlement. And if you understand that, then you realize that the indictment of Tether is kind of recursive, because we wouldn't have Tether in the first place if the regulatory powers hadn't completely fumbled their approach to handling crypto in general, and actually allowing for integration into the banking system, or at least allowing banking access from some of the big crypto exchanges. So if Binance and Coinbase and and any of these entities had dollar denominated bank accounts, this wouldn't be an issue. And I think it's ironic that Tether has now gotten so large that it might cause dislocations in the commercial paper markets, because Tether can't get a bank account either. So you had this situation where there were hearings earlier this week around the lack of integrity in the stablecoin market and questions around reserves and things like that. Well, at the end of the day, that's because the OCC, absent Brian Brooks, who did a great job last year, without him at the helm and without any real kind of direction, banks won't touch crypto companies. So it's one of these things where there's a lot of talk and no action, and certainly no effective policy creation from folks in DC and in the West. And so I think at a certain point, there are certainly people more patient than me in the industry, which is fortunate for all of our sakes. But it's mind-numbing to have the same conversations over and over again. And if you've been around for a while, there's a reason that you don't trust the policymakers at this point, because they don't understand it, or they're not willing to understand it, or they're actively working in bad faith, like the current SEC chair. So I think that's that creates its own issues. And given that as an opportunity, do you want to work with the crooked cops, or are you comfortable with like Omar, because that he's going to operate in the shadows, and maybe he'll like rob drug dealers every once in a while, but he still lives by a code, and as long as you're on the right side of that code, you're good. There's a lot of people that are willing to make that trade-off.
Yeah. I'd take Omar over a lot of other characters on that show. That's for
exactly.
Sure. So I'm just conscious of our time here, and I want to talk about the thing that you allude to as like potentially the big mega trend for 2022, which is DAOs. And we've talked about DAOs before on the show, specifically about how they're some of them are quietly amassing large treasuries. Now, sometimes that treasury is just their native token, so that's more akin to treasury stock than it is to actual money. But they often also have like big war chests, right? So why are you so excited about DAOs for 2022?
On a 20-year timeline, most companies are going to be decentralized, and the connective tissue for the company will be software, and it'll be smart contracts. The question then becomes, how do you actually align incentives and allocate decision-making responsibilities, and kind of create decentralized organizations that are as effective and competitive as decentralized organizations, as kind of the incumbent central organization. So a lot of that comes down to minimizing the transaction costs of the decentralized firm. And to do that, you need 100x improvement in information quality. You need a 100x improvement in kind of decision-making delegation, and you need kind of some operating system to manage and monitor performance over time. None of that has been built yet, right? If you think about kind of where we are in,
Not yet.
That's what I mean, right? Like we're not there, and every single decision within a DAO is essentially a proxy vote, no matter how big or small, and we all know that's completely unsustainable. So I think the big value unlocks in the next few years are going to be companies that essentially make it easier and more streamlined to contribute to work for, to manage, to kind of vote in decentralized organizations. And we're going to see thousands upon thousands of experiments and dozens of pieces of the infrastructure stack that are built to kind of cater to that need. We're obviously putting our money where our mouth is. We just launched a new tool called Governor, which is focused on governance tracking and ultimately making it easier for people to participate actively in tokenized governance, and to delegate their kind of voting power to folks that are thinking about this on a more full-time basis. So even that, though, it's incredibly immature, and it's an MVP of a broader MVP trend, I'd say. The potential there is massive, just because the capital that's locked in that segment of the market is massive.
Yeah, and so now turning the focus to you a little bit with Messari, because I know Messari's mission, as you sort of said, was to become the Bloomberg of crypto. And you said, I think the Bloomberg of crypto is going to be a network and not a company. And I think what's really cool about Messari is that it has sort of these elements of being a DAO without being sort of, at least yet, a formal DAO. And so I was just kind of curious, how do you think about that for your own project or company with Messari? Is Messari DAO a possibility in the future?
Whatever date Gary Gensler's out of office, I think, is the date that we'll be able to seriously entertain doing anything in the realm of DAOs, because I think I already have a bullseye on my forehead, and we're very happy providing services and information products throughout the decentralized economy. But we as a US based company have to be really, really careful. So we have a lot of ideas for how Messari and some of our services can be decentralized. But I've been personally very patient, maybe too patient in some respects, just like waiting until the market, and by the market I mean like the infrastructure is there to actually support this at scale. Could we have done a token earlier? Could have been very lucrative. Would it be trading at obscene multiples right now? Yes, and yes. Do I think that's kind of the optimal end kind of user behavior and network aligning mechanism that we have right now? Probably not. And one of the reasons for that is a lot of what we're trying to do is very subjective, and it just takes human curation for the time being. That's not going to change. Obviously, we have a mix of quantitative feeds and qualitative, but I think you throw token economics in there at this stage of the game, and it'll get even messier from a variety of standpoints, legal and regulatory, obviously, but just from a kind of user incentives and alignment standpoint.
And maybe you could create like a sidecar DAO for the research community that you have, and have a corp that sits there until Mr. Gensler has moved on to greener pastures.
Like I said, as far as I know, you're still allowed to think, but so we're doing a lot of thinking right now, and we'll be patient. But certain things I don't want to talk about just yet.
Sure, fair enough. So I want to actually go right back to the very beginning of the paper. And in the intro, you say that you have 99% conviction that this space will be an order of magnitude larger in a decade. Now, without seeming like we're paraphrasing Dumb and Dumber, 1 in a million, so you're saying there's a chance. I do want to know the 1%, what's it for? Like, what are the risks that you see to this reaching its full potential?
I would say it's a pretty dystopian future in the West, where we basically lose to China, and the U.S. balkanizes, and basically splits up as a country. Europe balkanizes further. The EU probably falls by the wayside, and we see just a lot of social unrest and political pain.
Well, it's reassuring you think that's only a 1 in 100 scenario.
Well, it used to be, the folks that have been around for a long time. I mean, the evolution from like 2013 to now, right? These kind of couple of different cycles has basically been like libertarian gold bugs, like in the Citadel, like, the dollar is going to crumble. We kind of figured out a secret early on. And then the next kind of cycle was all about like the technologists and the potential and everything. And I'd say like this cycle is basically the early folks that believe that this is actually going to usher in not just like a technically exciting future like last cycle, but actually like is probably building the life rafts and the social systems and the infrastructure needed in case our centralized institutions actually fail spectacularly, since they've already kind of been on that trajectory for the past 10 years. So I don't think that there's anything more hopeful than like the Web3 community right now, and the talent that's attracted to the space. Yes, a lot of people have made a lot of money. Yes, it's exciting and lucrative, and there's basically infinite design space. But I think for the most part, you have people that truly believe that this is going to be the foundation for not only a better future, but maybe the most optimistic future that we have in the West, given some of the other challenges that we have across the board. So
I completely agree. And I actually find that really refreshing that, people are not like, let's build the life raft for when everything goes to crap. Let's try and build a new future, right? And let's use tools as a way to do that. So I think that's great.
Well, look, life rafts are not a bad thing if you get all the people back on shore. If the ship sinks, but all the people are still there, you can rebuild the ship, and you can, the moral of the story in entrepreneurship is don't run out of money. The moral of the story in life is like, don't die prematurely, right? And then, I guess the moral of the story in crypto is, let's not have ourselves be in a position where any kind of top-down institution can just shut us down, right? And I think last year it was a little dicey for a minute in the kind of early stages of COVID, and I think we might be, dare I say, too big to fail at this point long term. But I think we're only really going to de-risk that in the next bear cycle, right? So we'll see how people react if we do go through a bear market, and if all of crypto's critics and the cynics kind of win out and basically say, look, I told you so, we need to basically, kind of strangle this thing. It wouldn't take much, right? But I think if we can continue to kind of eke out progress and kind of win talent, importantly, then we're going to be in a good spot.
Well, I think that's as good a note as any to end the podcast on. This has been a terrific episode. I guess we'll call it a double episode because it went for an hour. It's like the White Album of podcast episodes for us. So Anyway, that was great, Ryan. Awesome to chat. And that concludes DeFi Decoded for the year. We'll see you in 2022 we'll maybe in a year's time see how your crypto thesis held up and have you back to talk about the year after. But hopefully we chat many times before then. So thanks again, and Happy New Year.
Awesome. Thank you again, and hope everyone has a happy holiday.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.